Hey puppy trades! I wanted to do a video analysis update of the S&P 500 SPY, the Nasdaq QQQ, as well as reopening stocks like American Airlines, Boeing, Carnival Cruise Lines, Disney, and oil stocks and XLE. We'll talk about semiconductors a lot in this video, like advanced micro devices, Qualcomm and Intel. We'll talk about big tech like Microsoft, Netflix, Apple, and Tesla. I'll touch on Ethereum, and we'll talk about Procter and Gamble and Walmart in the big box retailing sector. So let's get right into it. These smaller numbers on SPY is the shorter term view that this is a wave one, an ABC correction puts in a wave two low. We then go on a wave three impulse and put in a wave four at exactly the 38.2% retracement of wave three. So the length of wave one placed at the wave four low conservatively takes SPY to 429. So what happens when we get to 429 is a lot of it's going to depend on the reopening stocks and where they're at, like American Airlines, Carnival Cruise Lines, and Boeing and XLE. So we're going to talk about those stocks a lot in this video. There's really only one thing that the bears have in their favor for June, and that's that June, especially the second half of June, seasonally can be pretty bearish for the stock market. But if we look at last June, right, that June sell-off didn't happen until after a big melt-up in the reopening stocks. And I think a similar phenomenon, is going to have to happen before a June sell-off. Now, why does the stock market sell off in June and March and September, right? Why are those the more bearish seasonal months? And that's because those are the ends of the financial quarters, right? So those are when the fund managers, the professional big money managers, they're turning in their report cards and they're rebalancing their portfolio for the next quarter. So that's why we see red towards the end of June. But if we look at what happened last June, we don't get that June red without a melt up first, especially driven by the travel and leisure stocks. So when SPY gets to 430, we're going to see where's American Airlines, where's Carnival Cruise Lines, where's XLE, and where's Boeing. But even in the most conservative view for this summer, when we get to 429, we get ready for a shallow and sideways wave 4, then the length of wave 1 placed at the wave 4 low will be a wave 5 target of 472, well past what we have called since the election the destination for the S&P 500. So why is 460 the destination for the S&P 500? Because the larger degree count in Elliott wave theory is the more important count. It's the bigger term view. And the bigger term view says that this is a wave one, very cleanly divided into 5 waves. The length of wave 1 placed at the ABC wave 2 low will take SPY pretty conservatively to about 460. So I want to make it very clear. The destination, the larger degree price target is 460. As long as that's understood, I have no problem, walking through these smaller degree counts of how we're going to get there. But the price target is 460. So how would that look on the Nasdaq? And before I get into the Nasdaq, a lot of people are going to say, puppy trades, 404, is too wide, right? And I understand that 404 is wide right now. But it wasn't a wide level, when we were talking about it in mid-May. So that's why traders, they have to take advantage when the stock market sells off and is giving these opportunities, right? But a lot of traders, especially newer traders, they get flustered, right? They start changing things up, right? They start seeing what's the news saying, what's that guy who sells a subscription service who's been wrong about where the stock market's been going for the past 6 months saying, right? And it's kind of like in football where they say if you have 2 quarterbacks, you don't have one. If you have 2 trading systems, you don't have one. And you can't just change everything up. You have to act when the stock market is giving. So that leads us to the Nasdaq. The Nasdaq QQQ, we have this wave 1 and wave 2. We have another wave 1, another ABC correction puts in another wave 2 low. So this ABC correction looks very similar to this ABC correction, and I think the result is going to be very similar. It's worth noting Nvidia and Facebook have already broken above this high. But anyway, this is a wave 1, an ABC correction puts in a wave 2 low at exactly the 78.6 to 61.8% retracement of wave 1. So the length of wave 1 placed at the wave 2 low takes QQQ to about 351, and that's a very conservative wave 3 target. So this is about 6 to 7 weeks. So that's where we get, this mid-July, late July scenario where Apple and Tesla and Amazon and Microsoft and Google are dramatically higher. Okay, so if QQQ stays above 316, the length of wave 1 placed at the wave 2 low is going to take the Nasdaq QQQ to about 351. That's a very conservative wave 3 target. We have a shallow wave 4 correction, and then we go on a 5th wave higher. So very bullish for the Nasdaq for this summer. And if traders are looking for, a stop or an invalidation level, or just a level of concern that's a little tighter than 316 for QQQ and a little tighter than 404 for SPY, I think the volatility index, the VIX, is going to provide it. So, the bears, they were unable to break above 27.57, so we got to give them, a closer level. So bears get the VIX, the volatility index, back above 24.48. You're just noise until you do that. So, traders have to act when the stock market is selling off, right? And when the stock market sells off, everyone calls for a crash, especially the people who are selling you stuff like the news articles and the subscription services. That's why everything I do is free. Okay, so what was I saying when the stock market was selling off in the middle of May? I said, I'm not worried about a crash, right? My biggest concern was the industrials are going to keep hogging the money from tech and that Boeing's going to explode, right? So in the middle of May, my biggest fear was that Boeing was going to explode, right? And it was going to hog money from big tech. And so far, for 2 weeks, that's what's happened. So I think American Airlines, Carnival Cruise Lines, Boeing, and XLE are really going to help be our guide to see how concerned are we about a June sell-off when SPY gets to 430? So let me explain with XLE first, because it's a very similar phenomenon, almost identical levels for American Airlines, Carnival Cruise Lines. We talk about United Airlines a lot. I'm just going to stick to AAL and CCL and Boeing in this video, as well as Disney, that this is a wave 1, and ABC correction puts in a wave 2 low. And then we break above this wave 1 high. In an Elliott wave theory, that gives us, a lot of confirmation that we're incomplete to the upside. So the 161.8% extension of wave 1 is the textbook wave 3 target. So we have not reached this textbook wave 3 target. And it's really important to realize this 161.8% extension of wave 1 is the exact same level for Carnival Cruise Lines, United Airlines, and American Airlines. We get a pretty similar level for Boeing as well. So this large degree wave 3 is very cleanly subdivided into 1, 2, 3, 4, 5 waves, where the length of wave 1 placed at this wave 4 low will take XLE to 61. Very similar story with American Airlines, where we have this wave 1, and then we have an ABC correction to put in a wave 2 low. The 161.8% extension of wave 1 takes American Airlines to 31. I believe this move is replicated, and American Airlines is going to waltz to about 31, which is the 161.8% extension of wave 1. So 31 on American Airlines. Is very important to realize that this level likely lines up with this level on XLE of 61. They're both the 161.8% extension of wave 1. So Carnival Cruise Lines is the exact same thing, where we have the wave 1 and a wave 2, and then the 161.8% extension of wave 1 is the wave 3 target. It has not been reached yet, but notice Carnival Cruise Lines has already broken above these highs, these previous highs, and confirmed it's incomplete to the upside. So this move gets replicated, and it takes Carnival Cruise Lines exactly to 36. So what's the point? The point is that Carnival Cruise Lines going to 36 is the 161.8% extension of wave 1. American Airlines going to 31 is the 161.8% extension of wave 1. And XLE going to 61 is the 161.8% extension of wave 1. So the point is, when SPY gets to 430, it's going to be really important to see where is XLE, where is American Airlines, where is Carnival Cruise Lines, right? If these reopening stocks have not yet reached the wave 3 target, I wouldn't be very concerned about a wave 4 correction for SPY. On the other hand, if SPY gets to 430 and we look around and we see American Airlines is at 31 and Carnival Cruise Lines is at 36 and XLE is at 61, then there probably is a reason to be concerned about a shallow and sideways wave 4 before we ultimately get past 460, 470 later this summer, okay? But that's the point, is when SPY is at 430, we're gonna need to look around and see where are these reopening stocks. If American Airlines is at 31 and XLE is at 61 and Carnival Cruise Lines is at 36, probably important to take some profits on these names, brace for a pullback before we ride the dip to 460, 470 for SPY. But if they're not, then it's likely going to be premature to prepare for, a major sell-off in the stock market. And like I said, a major sell-off in the stock market would really just be a shallow wave 4 correction, this end of June quarter portfolio rebalancing before we ride the 5th wave higher past the minimum wave 3 target of 460, to 470 later this summer. So American Airlines and XLE and Carnival Cruise Lines will be very important in guiding us when SPY gets to 430. Another stock in that same vein is going to be Boeing. So Boeing, remember, I said I'm not worried about a market crashing. I'm worried about Boeing exploding and hogging money from, the more growth side of the market. And so far, that's exactly what's happened. Boeing has a wave 1, and ABC correction puts in a wave 2 low. You get your Andrews pitchfork by connecting the beginning of wave 1 with the high of wave 1 and the low of wave 2. Boeing has another wave 1 and another wave 2. Taking the 161.8% extension of wave 1 gives a very comparable level to those wave 3 targets we just talked about on American Airlines, Carnival Cruise Lines, and XLE, where calling for a major top in the stock market while Boeing is below 307 likely is going to make traders look very silly. So this is a wave 1 and a wave 2. We really nail this huge reaction from the 61.8 to 78.6 retracement of wave 1. And now Boeing, very conservatively, is heading to 307. So it's going to be a very similar phenomenon with Boeing. If SPY gets to 430 and Boeing has not yet reached 307, calling for a major pullback is honestly going to look pretty silly. And if we look at Boeing right now, that's just going to be wave 3. We have a shallow wave 4. We go on a 5th wave higher that ultimately, I believe, takes Boeing all the way to the median of this pitchfork. So Boeing, is really a smoking gun right now with American Airlines, with Carnival Cruise Lines, that the market has a lot more upside, especially in the industrial side of the market, especially in the reopening sector. Another stock in that same vein, we talked about SeaWorld in my last video, but Disney is kind of another textbook reopening name that clearly has a lot more upside, that this is a wave 1 and a wave 2. It goes on a wave 3 rally that is very cleanly subdivided into 1, 2, 3, 4, 5 waves. And ABC correction puts in a wave 4 low at, guess where? The 38.2% retracement of wave 3. So the length of wave 1 placed at the wave 4 low is going to take Disney to about 216. So calling for a crash when Disney is below 216, Boeing's below 307, American Airlines is below 31, Carnival Cruise Lines is below 36, and, even very closely, XLE being below 61. I think that's going to be very premature. So let's get into the tech side of the market. I think that's sending a pretty big message. So I've said, prepare for the rotation into tech. Don't assume it. The worst thing a trader could do is ignore the industrial side of the market, ignore the reopening names because they're currently leading, and you never want to be premature with guessing that rotation is going to come, especially when you have such a beautiful screener like the bar chart straddle and strangle screener, where the reopening names were all over this, just screaming, loud as day back in February that they were going to outperform and do very well. And then very recently in the middle of May, I was looking at this and I was like, I don't think, we're going to crash if Carnival Cruise Lines, American Airlines, United Airlines, and Boeing are going to have huge moves. Also, look at this. AMC Theaters all over the screener at 9.70. So I don't think the Redditors did that. But anyway, that's a whole different story. Let's get into some reopening stocks. Let's get into some tech stocks because I really think these names are ready to go, right? Especially when we look at semiconductor stocks. There's a lot of semiconductor stocks that look like they're ready for liftoff. And of course, that's going to be very bullish for big tech. Let's start with Qualcomm and Intel, then we'll get into advanced micro devices. So if we look at Qualcomm right here, very clean count, extremely clean count on Qualcomm, where we have a wave 1 that takes the form of a leading diagonal. All a leading diagonal basically is a rising wedge where you have these 3 reactions on the bottom, these 3 reactions on the top, and then we have an ABC correction, this kind of kick out wave 2 before we go on a big wave 3 impulse. So that's exactly what happens. We have this huge wave 3 impulse. We have an ABC correction that puts in a wave 4 low at, guess where? The 38.2% retracement of wave 3. So when people are like, I don't believe in wave theory, it's like, then you didn't know that Disney was going to have a big reversal at 166, 167, because that was the 38.2% retracement of wave 3, right? You didn't know that SPY was going to turn around at 403, 404, because that was the 38.2% retracement of wave 3. And now you don't know that Qualcomm and advanced micro devices are going to have their big reversals at the 38.2% retracement of wave 3. So this is a wave 3 impulse, an ABC correction puts in a wave 4 low. That's going to give us our stop level right now of 123. So Qualcomm, if it stays above 123, I'm expecting a wave 5 higher. The most conservative wave 5 would be that it's the length of wave 1 placed at the wave 4 low. That very conservatively, 3, 4, 5 months from now, will take Qualcomm to about 169. I think that's going to be too conservative. I think more realistically, this wave 5 is actually going to be the length of wave 3 placed at the wave 4 low. And this 10-month rally gets replicated from the wave 4 low of about 123. And then the length of wave 3 placed at the wave 4 low, very early into 2022 is going to see Qualcomm in the 200, 230 range. So I think there's a lot of upside for Qualcomm. I think this is a beautiful setup. Great risk reward. 123 is the stop. 113 is the invalidation because that's the 50% retracement of wave 3. Those levels hold. There's a ton of upside for Qualcomm. Ultimately, breaking above this wave 3 high, 3, 4, 5 months from now is going to be very conservative. I actually think this entire wave 3 rally gets replicated from the wave 4 low, and Qualcomm is in the 230s early into 2022. In that very similar vein, it's almost the exact same setup on advanced micro devices where you have a wave 1 and a wave 2, then you have a wave 3 impulse that is very cleanly subdivided into 1, 2, 3, 4, 5 waves. Now, look at this, right? For those of you who don't believe in seasonality, right around this time last year, advanced micro devices is just, boring people to death, right? I specifically remember people being bored to death. I was bored to death with advanced micro devices consolidation before this crazy wave 3 run in the summer. And I think a very similar phenomenon is happening right now. So we have this wave 3 impulse. It's cleanly subdivided into 1, 2, 3, 4, 5 waves. We have an ABC correction to put in a wave 4 low at, guess where? The 38.2% retracement of wave 3. So almost identical to Qualcomm, where I believe the length of wave 1 placed at the wave 4 low is going to be a little too conservative, but even that conservative wave 5 target takes advanced micro devices to about 115. I think a more realistic target is that, like Qualcomm, this entire wave 3 rally is replicated, and early into 2022 for Qualcomm and AMD, the wave 5 the wave 3 being replicated as a wave 5 target is going to be about 10 to 12 months. I know that's far away, but the price target is also very far away that these huge moves get replicated. Wave 5, generally not as fast as wave 3, but it can definitely be the same length as wave 3. So that's exactly what I think is going to happen. The length of wave 3 placed at the wave 4 low is going to say 115 is too conservative. Advanced micro devices is getting ready for a huge move to about 136. And it's going to be very similar to last summer, almost even to the date where it's getting ready to launch. So this move is from 316 to about 111. It's almost the exact same dates we get for Qualcomm, and I think it's going to be the exact same scenario where 10 months from now, 12 months from now max. I know a year out, seems like a long time, but I really think that early into 2022, the length of wave 3 placed at the wave 4 low takes advanced micro devices on a wave 5 to 136. Around that same time, Qualcomm is going to be going on this huge run to 232. Advanced micro devices right now, we can only play it tight that 72 holds as the low. Okay, so 72 holding as the low. The real invalidation for a wave 4 is probably going to be a little wide. That's down there at 67. That's not too wide. 67 to 72. If those levels hold, the length of wave 3 placed at the wave 4 low takes advanced micro devices to 136. It takes Qualcomm, with advanced micro devices to about 232. I'm expecting huge wave 5s for AMD and Qualcomm. Intel, I think, is going to be a silent participant in this huge semiconductor rally. So Intel, this is just textbook right here. We have a wave 1, an ABC correction puts in a wave 2 low. Then we have this huge wave 3 impulse. We put in a wave 4 that perfectly retests this wave 1 high. We have this wave 5, and then we have an ABC correction that puts in a wave 2 low. So this is a 1, 2, 3, 4, 5. Large degree wave 1, an A, B, C correction puts in a large degree wave 2 at exactly the 61.8% retracement of wave 1 for Intel. So I love Intel. It's kind of the redheaded stepchild of the semiconductors. I think that's going to change, but I think advanced micro devices and Qualcomm, they could continue to be leaders as well. I just think Intel plays catch up. That this is a 1, 2, 3, 4, 5 large degree wave 1, an A, B, C correction puts in a large degree wave 2 at exactly the 61.8% retracement of wave 1. The length of wave 1 placed at the wave 2 low takes Intel to 78. 4 or 5 months from now, and I think like Qualcomm, like Advanced Micro Devices, that's going to be very conservative because that's just the shallow wave 3 target. We would have a wave 4 correction and then go on a 5th wave higher. There would likely be the length of this move replicated yet again. So 10 months from now, 12 months from now, really even just early into 2022, I think Advanced Micro Devices, Qualcomm, and Intel are dramatically higher, right? So the stop for, a really tight stop for Intel would be this wave too low of 53. I think that's too wide. I think the 78.6% retracement, given this large upside target, is a better invalidation level for a wave 2. If Intel's above 48, the length of wave 1, plays at the wave too low, takes it to 78, about 4 or 5 months from now, I think that's going to end up being very conservative. We have a shallow wave 4. We go on a 5th wave higher yet again. So all these semiconductor stocks look very good. Now, I know I've been saying don't ignore the reopening names. Don't ignore the reopening names. But that doesn't mean there's not a lot of opportunity in big tech. And there is a lot of opportunity in big tech. So let's get into big tech. We've talked about, the Nasdaq having a wave 1 and a wave 2. Another wave 1, another ABC correction, puts in another wave too low. It's use your imagination. If the Nasdaq is above 316, if we want a tighter stop, I think we're going to get it from the volatility index holding, below this low about 24.83. But let's get into some individual names for big tech, because Microsoft right here is a very similar story of what we just talked about for the Nasdaq, where we have a wave 1 and ABC correction puts in a wave too low. We predict this rally in time and price. I actually thought it was going to be a wave 3. It looks like it's another wave 1. And the reason I say that is because this ABC correction is putting in a wave too low at, guess where? Exactly the 61.8% retracement of wave 1. So when people say, I don't believe in wave theory, it's like, okay, then you're not going to believe Microsoft is going to have a major wave 2 reversal at the 61.8% retracement of wave 1. You're not going to believe that Intel is going to have a major wave 2 reversal at exactly the 61.8% retracement of wave 1. So Microsoft very likely will go the length of wave 1 placed at this wave 2 low. And while QQQ is on its way to the 350s, Microsoft is going to be on its way to the 270s, 277 range, right? We've been using Microsoft as a lot of evidence, the market wasn't going to crash. And I think that Microsoft right now, if it's holding above 238, and then we have this 78.6% retracement of 232, it's an almost identical setup to Intel, where if it's above 232, a pretty tight stop would be 238. The length of wave 1 placed at this wave too low, very conservatively takes Microsoft on a run to about 277. It's going to be a very similar time horizon even, where, mid-July, late July, we see Microsoft in the 270s. Now, that does not mean I'm going to go buy a call on Microsoft that expires in 7 weeks, okay? That's options trading, okay? That's a completely different game. Okay, in options trading, the price of a stock is the third most important variable, okay? Implied volatility, theta, delta, and gamma are way more important, okay? You have to understand how theta works and implied volatility works to trade options. The price of where Microsoft is going and where all these stocks are going, that doesn't mean that because I think 2 months from now, Microsoft is dramatically higher, that I'm buying a call at that strike price that expires in 2 months. Okay, that would just be a blatant disregard for options pricing. I'd be better off literally donating my money to charity for tax purposes. Okay, but this is a wave 1, and ABC correction puts in a wave too low at exactly the 61.8% retracement of wave 1. The length of wave 1 placed at the wave too low takes Microsoft to the 270s, 277. Now, this run is from 3.4 to 427. Very similar to Apple and Amazon, very similar to QQQ itself, where, mid-July, late July, I think conservatively early August, big tech has a huge run higher. Okay, and I think the options market would agree with me. We'll get to that when we talk about Apple and Tesla and Netflix. But for right now, the length of wave 1, placed at this wave too low. A tight stop is 238. Wider invalidation is 232. Microsoft is going to go on a big run to about 277. Okay, we talked about Microsoft in this range, on 324, because that was when implied volatility was at the very bottom of its 1-year range. It's since made another low, so options have become even cheaper than they were before the Department of Defense announced a massive contract with Microsoft. And we're going to get to the options market when we talk about Apple and Tesla. Let's talk about Netflix first. Netflix looks really pretty. Now, people don't believe in seasonality, okay? And it's like, that's okay, but Netflix is consolidating into a huge bull flag, just like it was right before its huge run last summer, right? And Advanced Micro Devices is boring people to tears, just like it was right before its huge run last summer, okay? So Netflix, very pretty, wave 1 and wave 2. Another wave 3 rally happens. We have an ABC correction to put in a wave 4 low at, you guessed it, the 38.2% retracement of wave 3. That's where wave 4 ends. It's very close to, I think that's a very clear level right now of 458 for Netflix. If Netflix is above 458, I think this is a great setup. Very conservatively, the length of wave 1 placed at this, wave 4 low. It's really going to be the wave 4 low is right here. Some will say that this is a triangle, and so they'll have the wave 4 in. Regardless, they're basically the exact same numbers, and I'm going to get to in a second. I actually don't think the wave 5 target should be the length of wave 1. I think really conservatively, we see Netflix in the 620 range, 4 or 5 months from now, 6 months at the very latest. But I actually don't think that should be the target. I think realistically, this wave 5 is going to be the length of wave 3, placed at the wave 4 low. And we talked about in my prior videos. The reason that is it looks like we've already started wave 1 of wave 5, and we're putting in right now wave 2 of wave 5. And the 161.8% extension of wave 1 would be way higher than about 620. So I actually believe that Netflix, the wave 5 target should be the length of wave 3, placed at the wave 4 low. That's going to take Netflix to about 740. As crazy as that sounds, 743 would be the length of this wave 3 rally placed at this wave 4 low. This rally is from 316 to 713, right? This is exactly a 4-month move. I think 6 months from now, honestly, pretty conservatively, 6 months from now, we're talking about Netflix in the 720, 730, 740 range, because that's the length of wave 3, placed at the wave 4 low. Now, wave 5 can be the length of wave 3. A lot of times, it's not going to be as fast as wave 3. So I'm adding 2 months for that 6-month time target. If Netflix is above 458, I've got a lot of ambitions for Netflix. And then the invalidation level would be the 50% retracement of wave 3, which is 432. I think right now we focus on this wave 4 low holding for Netflix, and I do believe it will. And then the length of wave 3 placed at the wave 4 low. 6 months from now, as crazy as it sounds, we're talking about Netflix in the 700 range. So let's get to Apple and Tesla. Before we get to Apple and Tesla, I have to tell a story about last October, right before the election. So this was from October 30th, okay? I was really getting clowned for this, but I said that, Tesla was about to have a huge run. It was basically forming, a bull flag, and I was using this equal legs principle that Tesla, I called it Tetflix, was going to go the length of this rally, placed at this low. It was going to go to the lower bound of the pitchfork. It was going to go to the median of the pitchfork. This all was going to happen in 607 weeks, okay? I was just getting absolutely laughed at for this. But I wonder why I was so, confident on October 30th that Tesla was ready for this huge move higher. And I'll show you. So this is a picture I actually took with my phone of the bar chart straddle and strangle screener way back on October 30th. We see Tesla is all over this screener. Let's look at some other names on this screener, right? So if you remember, right, Tesla is on the screener before it's announced that it's being added to the S&P 500, right? So it's on the screener 5 times, and then, what happens to Tesla? We all know what happens to Tesla, right? This is October 30th. It's all over the screener, and then boom, right? Then the news comes, right? But the options market clearly knew that a huge story was coming. Let's just look at some other names on the screener. Okay, Intel and Micron have had massive moves. Citibank has almost doubled since it was on the screener. But look at these 2 other names. I think this is really interesting. This is the theme you're going to see. We talked about AMC Theaters being on the screener a bunch at about $9, okay? But this is Pivotal Investment Corp's PIC. This is Lacacia Holdings LCA. Now, both of these stocks doubled in price, but they actually don't exist anymore as individual tickers because they exploded on news that they were getting bought, okay? And I don't even know why Intel and Micron, what they told you guys about why they exploded. Red Rocks Resorts and Boeing exploded in part of the reopening play. But then Tesla is all over the screener with extremely cheap options, right? We know the big boys are accumulating very cheap premiums on Tesla, right? On October 30th, before it's announced that they're joining the S&P 500. And you will see this time and time again. To me, it's almost identical right now as it was October 30th, right? I'm getting clowned for this extremely bullish projection that will end up being conservative, right? And then after, Tesla hit my price target or got very close to my price target, I came out on on November 27th, and I said, wait a minute, I think 607 is going to be way too conservative. Tesla's going to go to 764 for this huge, larger bull flag, right? And that was even more laughable that Tesla would reach 764 by March, right? Of course, we know that ended up being extremely conservative. The reason that I bring that up is not to say, I told you so, but it's just the exact same situation it is right now where, anyone with a paid service, right? There's nothing wrong with, having a paid service, I guess, but anyone with a paid service right now, this is what they're going to tell you, that Tesla is going to take another leg down. Now, a lot of you guys are too young to remember this, but that's exactly what they said about Tesla down here. When Tesla had already completed this big ABC correction, they said that Tesla was going to go on another leg down. It was just me and a few other people that were like, you know what? I actually think this ABC correction is complete. The options market clearly seems to believe a huge move is coming for Tesla. I don't think it's going to be to the downside. I think it's going to be a ripping run to the upside. I really think a similar phenomenon is going on right now where, anyone who's charging you money, they're telling you Tesla's going to 420. And we need to understand why they think that. Because if we just look at Tesla in a vacuum, that argument could have some merit. So understanding the bear argument is paramount to understanding the bull argument. What they think is that this is a 535 Elliott wave flat. Now, a lot of people, hopefully, if you're paying for a guru, they're not telling you to short Tesla to 420. Okay, they shouldn't be, because even, if they're right, they're calling for a corrective wave. I don't think they're going to be right, but this is what they're saying right now, that this is a 535 corrective flat. And honestly, if you just look at Tesla in a vacuum, without looking at the options market, you just look at Tesla's price, just from a wave theory perspective, right? They've been more right about Tesla than me so far. That this is a 1, 2, 3, 4, 5 wave A. This ABC counter trend rally is a wave B. And then what they're saying is Tesla's going to take a wave C down, which will be the length of this move placed at this low. And then, they're looking to buy Tesla at about 410, 420. Okay, I think that, if they're not saying to short Tesla, then that's fine. I think that that's not going to happen. Okay, here's what I think is going to happen. I believe it's almost identical to October 30th, right? We've just ended a month. I'm getting clowned for, being bullish Tesla, right? You can go scroll to the very beginning, of this channel, some of the early videos. The comment section is just, when's Tesla getting to 500, right? It's really funny that I was being, clowned for having Tesla go to 500. I don't care, right? The fact that retail traders, disagree with me, it's pretty bullish, right? I was getting clowned for saying Ripple was going to explode at about, 30 cents, right? Now everyone wants to know when to buy it, when it has passed $1.80. But this is Tesla. Here's my count for Tesla. It's gone on an ABC correction, and then it goes on a wave 1, and then it's put in a wave 2 low. So for me, until we get Tesla below 546 to 539, very premature to say it's going to take another leg down. I actually don't believe it's going to take another leg down. I believe Tesla will hold above 546. I believe Tesla is definitely, I don't want to say definitely, but I really think Tesla's going to hold above 539. And I think we're going to have a big squeeze for Tesla where everyone's expecting, this equal legs move down to about 420. Right? It's always after Tesla, has had a big sell-off. They're calling for more downside. I think the ABC correction is complete. Until Tesla is below 539, I think bulls are still in control. This is the wave 1 and a wave 2. And then there's a good chance while Apple and Intel and Microsoft and Google and the Nasdaq and all these tech names that we talk about are going on this huge rally higher, that Tesla is with them. So until Tesla's below 546, until Tesla's below 539, which I want to say very clearly is going to be the invalidation level. Now, I understand that's tight, all right? It really is kind of do or die mode for Tesla right now for the bullish scenario. But I believe this is the wave 1, this is the wave 2. The wave 3 target is the 161.8% extension of wave 1. And that's a very conservative wave 3 target because we'd have a shallow wave 4 correction. We go on a 5th wave higher. And, I don't really think we need to, forecast further down the line. Let's get the 530 or 930 first. Let's hold above 539. But I think this is really what it's going to look like for Tesla, that Apple and Tesla, they're with QQQ, with Facebook, with Google, with Microsoft, and with all these semiconductor stocks, they're going to participate in the big summer run until Tesla is below 546, 539. I still believe the bulls are in control, and Tesla will go to the 161.8% extension of wave one. I think it's premature to say that we're going to take, this 535 flat down. If that did happen, it would be an extremely great buying opportunity. Shorting Tesla to 420 is very stupid, very ignorant, because even if you're correct, you're shorting a corrective structure. And I think a lot of people are about to learn that lesson, that you don't short a corrective structure in Elliott wave theory. As long as Tesla's above 539 to 546, I expect this is a wave one and a wave two. We go on a wave three impulse higher to 929, have a shallow wave four, then go on a fifth wave higher. So I think there's a lot of evidence from the rest of the tech sector, as well as Tesla itself. It's going to go on a huge wave higher. Now, this is exactly what I've been saying for a very long time. And then what happens very recently, voila, Tesla is all over the screener on June 1st. I mean, it really is deja vu to October 30th. I'm getting clowned for my bullish projection. I'm in a room by myself. That Tesla's going to go much higher. But just recently, on October 1st, very similar to October 30th, right? The month ends, and then boom, all of a sudden, the options market is accumulating premiums on Tesla, saying there's going to be a huge move. Is it possible that this huge move that they're anticipating now is going to be to the downside to 420? Yes, that is technically possible. Okay, I don't believe that's going to be the case. The options market is screaming at you right now. Tesla's about to have a monster move. And while we're on the subject, they're also screaming, and they've been screaming for a little bit now, for a couple weeks, that Apple is going to have a huge move too. Is it possible that those moves are to the downside? Yes, it's possible. Is the bar chart straddle and strangle screener a magical screener? No, it's not. Okay? But there will be a massive move for Tesla. And I really expect with Apple, with the rest of the tech stocks, it will be to the upside to the 161.8% extension. All right? Make the bears get Tesla below 539. I can't stress this enough. It's very invalidated for Tesla, and bulls would have a bunch of work to do if it got below 539. Let's talk about Apple. I think Apple looks really good. I really do. That Apple, people, it's the exact same thing where they're saying that this is a 1, 2, 3, 4, 5, and then this is an ABC counter trend rally. I don't agree with that. I think Apple and Amazon both go on a 1, 2, 3, 4, 5, large degree wave one. Apple is completing an ABC correction, and it's put in this wave two low at about 122.52. Now, the wave two retracement zone is between 120 to 124. Okay, so if Apple's above 120, that's the 78.6% retracement of what I'm calling wave one. I would expect that if that level holds, and the invalidation level is the beginning of wave one of 116, but the 78.6% retracement of 120, pretty important. 116 would be the true invalidation level. But if those levels hold, I expect that this is a 1, 2, 3, 4, 5, large degree wave one, an ABC correction, large degree wave two. The length of wave one placed at this wave two low takes Apple pretty conservatively to about 143 in almost the exact same time parameters down to the date that we talked about with the Nasdaq. So I think, will the stock market crash as the Nasdaq rips? Will Tesla and Apple crash as the Nasdaq rips to 350 and beyond? It's almost mathematically impossible because they're large components of the Nasdaq. I don't think this underperformance for Tesla and Apple continues. I don't think it can continue much longer. And I think the option market now, even before we had this information, is giving us a lot of evidence. Apple and Tesla, they're going to have big moves. Okay? Apple and Tesla are going to have huge moves. Is it technically within the realm of possibility that those are to the downside? Yes. I don't think that's going to be the case. I think that these huge moves are going to be summer-long rallies for Apple and Tesla. Ultimately, honestly, I expect that when we get to the end of the summer, 930 was extremely conservative for Tesla. And I think 149, which is the 161.8% extension of wave one of 149, is extremely conservative for Apple. Apple and Tesla would both have shallow wave four corrections before going on a fifth wave higher. So if Apple's count plays out exactly how I expect, it will hold above 116 to 120. It will go to the 161.8% extension of wave 1 for this wave 3 target. We'll have a shallow wave 4, and then the length of wave 1 placed at this wave 4 low takes Apple to about 160 towards the end of this summer. So I'm extremely bullish on Apple. I'm extremely bullish on Tesla. I can't stress this enough. I don't use words like this. I don't like to be a levels to level trader when I can't, but Tesla has to hold above 539 for us to make this argument that it's a wave 1 and a wave 2. Apple's a lot closer to doing that, where this is going to be a wave 1 and a wave 2. Very bullish Apple, very bullish Tesla. We have a rare guarantee right now from the stock market, or from the options market. These two will have huge moves, okay? I don't think the bet to be making is that they're going to be the downside. I think that this huge rally from Apple and Tesla is going to resolve to the upside. All right, so that's my spiel. Tesla, we have to see it above 539. If it is, bulls are still in control. And we're going to the 161.8% extension of wave 1, which is 929. Have a shallow wave 4 correction, go on a 5th wave higher. It would line up very similarly with Apple going to the 161.8% extension of wave 1, which is 149. We have a shallow wave 4 correction before Apple goes on a 5th wave higher to at least 160. So let's touch on crypto a little bit. This is Ethereum. Ethereum, we talked about Ethereum right at the 61.8% retracement zone of 1720. I really think that was the generational last chance to get into Ethereum, to get into Bitcoin, to get into Litecoin. I'm using Ethereum right now as my guide for really the rest of the crypto sphere. And for time constraints, we're just going to focus on Ethereum in this video. I think crypto has put in a major low at this end of May sell-off. I think that this ultimately, when we look back, this wave 2 low where this Ethereum was below 2,000 is going to be the last time ever that we see Ethereum below 2,000. Okay, I really believe that. I think the bus is taking off right now for Ethereum. This is going to be a wave 1 and a wave 2. Those that got in below 2,000, that was it. Okay, because this is a wave 1 and this is a wave 2 low. I think Ethereum's next conservative wave 3 target is 6,000. We have a shallow wave 4 correction, then we go on a 5th wave higher. Now, I think 6,000 is the best kind of swing target for Ethereum, and that's not going to happen tomorrow, right? This whole rally takes a year. You know, I think around this time next year, if it's a wave 1 and a wave 2, then Ethereum would be well past the 6,049 target. Because wave 3 is generally stronger and faster than the length of wave 1 for Ethereum. Now, Ethereum does form a big wick at the 50% retracement, so a trader hypothetically could call this a wave 3 and a wave 4. Either way, I believe wave 5 would be the length of wave 1, or would be the length of wave 3 placed at the wave 4 low. My next target for Ethereum is 6,000. I believe that will be hit early in the 2022. And I think that's honestly going to be pretty conservative because I don't think that's a wave 3. I don't think that's a wave 4. I think this is another wave 1. I think this is another wave 2. I think what we're going to see, Bitcoin at 30,000, Ethereum below 2,000. We're never going to see those numbers again. Okay, I really believe that. And right now, it looks like crypto's taken off, you know, from when I posted this. I posted this, you know, during the bloodbath, right? I said, you know, I think Litecoin ultimately is going to go to the median of its pitchfork. We talked about Litecoin's, you know, reaching the median of its pitchfork for a pretty long time, that Litecoin was going to go to the median of its pitchfork and that it was silly to call a top in crypto before then. We talked about Ripple, you know, doing the exact same thing. And I had someone ask, well, what's Ripple's price target? You know, when do I get into Ripple? The time to get into Ripple was when it was below, you know, 30 cents. Okay, there's no setup on Ripple now. And I think it's pretty similar right now that the people who got into Ethereum below 2,000 and the people who got into Bitcoin at about 30K, that's it. We're never going to see Bitcoin, you know, at 30K. We might see Bitcoin at 30K, but I really don't think we're ever going to see Ethereum below 2,000 ever again. I think the length of wave 1 placed at the wave 2 low is going to take Ethereum to about 6,049. I think that's ultimately going to be very conservative. So I just want to touch on Ethereum for a little bit. I'm going to be using this as a primary gauge for the market, as well as Litecoin going to the median of its pitchfork, as well as Ripple going to the median of its pitchfork. Now, I want to talk about two setups I really like. These are Procter and Gamble and Walmart. I just want to touch on these for a little bit. We've talked about them a lot, but I think that these names, you know, they're quietly going to become silent leaders this summer. This is a wave 1, an ABC correction puts in a wave 2 low. We go on a wave 3 rally, a wave 4 perfectly retest the wave 1 high. Then we have a 5th wave higher to put in a large degree wave 1. We have an A, B, C correction to put in a wave 2 low. Between the 50% and the 61.8% retracement of wave 1, the length of wave 1 placed at the wave 4 low is going to take Walmart to about 178. So this rally is from 318, to 1201. That's about 7 or 8 months. If this is a wave 3, it could happen a lot quicker than that, where 5-6 months from now, we see this conservative wave 3 target, which is the length of wave 1 placed at the wave 2 low, take Walmart to about 178 before we have a shallow wave 4 correction and then go on a 5th wave higher. I love Walmart. Very similar name in that vein. By the way, the stops for Walmart, I think a pretty tight stop would be 135 as a smaller degree wave 2 low. The real invalidation is going to be this larger degree wave 2 low of about 126. If it's above 126, very tight above 135, Walmart is on its way to 178. I do think that gets hit in the second half of this year. So here's Procter and Gamble, almost the identical count. I've said before, if you took away the tickers, it's almost identical. It's even down almost identical to the number where Procter and Gamble's at 135, Walmart's at 140. But very similar setups, very similar charts for Walmart and Procter and Gamble. Wave 1, 2, 3, 4, 5, large degree wave 1, an A, B, C correction puts in a large degree wave 2 low. The length of wave 1 placed at the wave 2 low is going to take Procter and Gamble to about 174. I think it's going to be very similar time target and, price target even. That's a conservative wave 3. We have a shallow wave 4 correction. We go on a 5th wave higher. Same levels even for Procter and Gamble. I want to see pretty tightly this low of 130 hold, and then the larger invalidation is 122. So Procter and Gamble and Walmart, I think silently, are going to be very nice plays, for the rest of the summer, for the rest of this year. Very nice diversification plays on, more defensive days like we've had today. So that's my spiel. Want to answer a few questions about the bar chart straddle and strangle screener. I don't use short straddle. I don't use short strangle. I use long straddle and I use long strangle. And no, this is not a magical screener. Remember my parameters? My parameters for the screener, I want to see well over a year of options trading history. I want to see you and your entire sector consistently on this screener. And I want to see a stock price, above $10 or $15. I think, does this screener, is it magical? No, it's not magical, but it knew about AMC. It knew about AMC when it was at 9, and it knew about Intel, Micron, Citibank. It knew about these two stocks, Pivotal Investment Corp and Lacacia Holdings, getting bought out, and it seems like it knew about Tesla getting added to the S&P 500. So no, there's no magical screener. All right, there's no magical guru. And it's definitely not me, but I go to long straddle, long strangle. I can't believe this is free. I've been around the block for a little bit. This is the only thing I would ever pay for as far as trading services or information goes, but I don't have to. It's completely free. Make a free account, give them your email, start taking a picture of the bar chart straddle and strangle screener every day, and I think you're going to see why we use the options market so much, because this will give you a list of names that are going to move. We see right now American Airlines, United Airlines, NCLH, and Boeing, they're still on the screener. They still have a lot more upside, and the charts definitely agree. So, calling the top in the market before Boeing reaches 307, before American Airlines reaches 31, before Carnival Cruise Lines reaches 36, before Disney reaches 216, before XLE reaches 61, I think that's going to look very silly.